focus on the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and even though the market keeps going up, we have a big problem. We already know to watch for the momentum. We know to watch for the minutes in the consumer data. But now there's one thing we forgot to bring up this week that could really derail everything, or it could make the rally a little bit more gas. So I'm going to get into it. I'm not going to waste time. But before I do it, just drop your thumbs up on the video and make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We'll see you in the morning, but I'm not going to waste any more time. What is the big problem? Even though we have so many things to watch for, we had awful economic data today, the big options expiration is August 19th. Don't you forget any of these big middle of the month expirations. We had one in April. I think we had one around June too. July wasn't that big, but remember June and April, those were two big expirations, and that is where we saw a lot of the market move. Well, August 19th is one of those expirations, and right now it's looking as if 30% of the gamma on the SPY and SPX is going to be expiring on Friday. So what this means is that coming into Friday and then even afterwards, we might get an exasperated move off of whatever else we see. So we got a lot to talk about. Like I said, I have the whole recap for you. There was a lot of other stuff today. We had economic data out of the United States. Surprisingly, China, they did a surprise rate cut, but them doing that really just set off a lot of things, and their economic data was bad, so that had effect. But there was a lot of action, but no matter what, or even without all of it, the market was able to close green again. So I got the plays, I got the keys, and everything for the rest of the week. So I already told you what to do. So right off the bat, getting into the keys, like I told you guys, the monster lurking beneath the surface right now is that big options expiry. Again, yesterday we talked about momentum. Again, you are above the Fibonacci's. You are even above a lot of the levels. Actually, here's another little fun fact for you. This is the 14-day RSI that is above 70, and what this chart is showing you, over the last 2 years, this is now like the second biggest rally, or the second most overbought rally, in the sense that you almost have 30% of the S&P trading above the overbought level on the RSI. Again, I'm not the technical man, but I always like reading these, and again, this is a technical thing that you haven't seen really in years, so this was interesting. But like I'm saying, man, this monster beneath the surface with the options expiration, this could kill some of the momentum, and then we will see how a lot of these things work. But that is the first big key. Now, coming into key number 2, the data today was awful, but it did not shock the markets as much. So maybe if we get the consumer earnings tomorrow out of Home Depot, Walmart, Target, and all of that, that could change things. Or if the Fed minutes show that Powell really wasn't that dovish, that could also change things. But besides that, the market did not respond to the data. And here's the data. This is why I'm kind of surprised. This was the Empire Fed manufacturing. And granted, it's not like tier 1 data. It's not like the CPI. It's not like the PCE or anything like that. But the fact that it came in so low is very surprising. This was actually the second lowest print in the history of the Fed Empire manufacturing, and the only time it cratered this low was during 2020. So there was bad data today. Again, even China, that sparked some things, and even if you notice oil down 5%, that was a negative impulse from what China said, because now people are like, well, China's economic data is bad, they're cutting rates, probably oil demand out of China will drop. But overall, there was bad economic data across the globe, but we somehow managed to melt up, and that's just word to the momentum, what we're doing with and how the market's going to operate until we get the Fed or any data. But that is the second key. Keep that in mind. But really, what I'm saying to put all of this together now, the momentum is chugging along, but that 430 to 433 level, those are going to be the next big levels. That's where we dropped earlier. That's where the 200-day moving average is. That's like where everything is focused. So depending on how we play this week, those levels will be able to say a lot, but essentially factor in everything this week. You're going to have a big options expiration. You're going to get the minutes. You're going to get a lot of consumer earnings. And that's why now, as we get to Thursday, Friday, you really want to see where the market is holding. And that will tell us a lot now getting into the next week of data. And then things might start to heat up a little bit more if they haven't already heated up enough. So that was all the main rundown there. Again, it's very, very simple. Keep your eyes out for that expiration. But now the question is, what data and when is that data going to come that will knock the market out of this bullishness? So I hope you're ready, but let us get into the plays. So, right off the bat, I got a bunch of plays for you. Actually, the first 3 plays that I'm starting with, I made a play on all of them, and I'm going to share with you. Honestly, let's just start with it. Walmart, Target, and Home Depot, I grabbed puts on every single one of these. Why? The only reason, literally, there is no other reason that I bought these other than the fact that they are cheap. I showed this today on stream. Here are some in-the-money calls for Walmart. As you notice, they've gone pretty much a couple 100% just over the last week. Same thing with Target, same thing with HD. A lot of the call premiums in this rally, and given how they've traded with some of these consumer staples or discretionaries, they've done very, very good. But now leading into the earnings, the premiums are very, very high. And we talked about this earlier today too. The Walmart guidance, remember a couple weeks ago, that dropped the stock. It's kind of good because that takes away some of the event risk premium. Now that you know they've guided down on a big metric, it takes away a little that shock and awe when the earnings comes out, so that's good. But the fact that there's no event premium and the calls are still juiced and the puts are cheap, it just makes more sense for me to go for the puts. So as far as the plays, for the Walmart, I grabbed an August 26th next week 123 put. I paid about 72 cents, came down a little bit, but didn't really move much throughout the day, even though it went up. And I grabbed these right in the morning, so in a weird way, the puts kind of did hold up. And then for Target, I got a next week way further out the money, and this one actually showed up on the scanner, so I was like, all right, I'm down with it, hoping we get a run-up or a sympathy out of Walmart. But I grabbed the next week Target 125 puts. I bought 10 of them for 15 cents, $150 total. And then finally, for the Home Depot, I did a debit spread, got August 19th, 295 puts, then sold the 285s. They cost me about $1.25 a pop. Those did come down throughout the day, so those were probably the worst out of all of those. But again, like I'm saying, all of these put premiums were cheap. They have earnings. This is like weird consumer data, or pseudo consumer data is how I view it. I said, let me go with something where the risk to reward is higher, but I can't predict what they are going to report, so we will see what happens. But those are the first 3 plays. I really, really like it. Now, number 2, this one's going to be interesting, Chad, because I'm going to drop a specific strike price and a date and just call, like, just, all right, just listen though. I'm not in this play, and I'm giving you the metrics to what would make me want it. So what I'm telling you, I'm not in this, and I'm not going to buy it if it stays above this price. But that second play, NFE. This is related to natural gas. We brought this one up last week. Remember, CNBC, Bloomberg, like legitimately, a lot of people have been talking about this stock, and go look at its chart. It's been killing it, and I answered this today related to natural gas. I said I would hold natural gas plays, but I wouldn't really add to them right now. Why? The premiums are still up. We still got October's in the money. Remember, we hit the bottom. They're literally still up from there. So now I'm hoping we could get some lagging, and now that's where NFE comes in. It's hanging out near the top right here, but the September 75 calls, I really, really like these, but you need these below 40 cents. So there's the last trade that came in at 35. If you could get these below 40, I think it's a good deal that can turn into a lagger, especially if UNG goes up and then you're not too far behind. But if they're at 50 where they're at on the ask, I wouldn't touch them. Again, that's a big, big gap, and these are still about like 50% out the money, so keep that in mind. If these contracts fall below 40 cents and it's like only a week of time left, obviously the play is going to change. But if we get more volatility with natural gas, I would not be surprised to watch these go up. And then there is a lagging contract, but you need those at a good price, so watch out for that. That's number 2. And then finally, Where's my, do I call you guys Bapes? Like bathing, oh my, hold on. Yeah, I got inspired. We're calling them Bapes now. It's like an ape, but that's like bathing. You know what I'm saying? Like Bed Bath & Beyond is bathing, but BBBY, ladies and gentlemen. Yes, I'm going to talk about it. Remember, we brought this up a couple weeks ago. I even brought it up late, like, Chad, bro, you guys were posting it all in the chat. You know how I am towards it. And again, you got to be cautious in these markets. So that's why we're like, all right, let's throw something small. We've been seeing kind of the meme stock hedge, but BBBY is going crazy and it outperformed a lot of the other meme stocks today. So I would definitely keep watching this, but I'm telling you, here is the secret for all of the meme stock plays. Or it doesn't have, again, I'm not trying to say meme stock like in a derogatory thing. What I'm trying to tell you, any of these plays that are getting pumped and the premiums go high and it's making these parabolic moves, take advantage of the debit spreads, because even if you get into it later, again, we bought it a couple weeks ago, by shorting some of the further out the money higher premiums, it will definitely pad the stats. So that BBBY play, that was the old debit spread. I sold out like 3 out of 5 today. We made over 100%, and now I made it free. I still have like $1,200 of upside gain, but the thing I noticed about this play, and actually you could literally still see it here right on the thing, I'm down $36 on the contract that's closer to the money, which was a decent contract. Again, they were $150 at the time. That means they're going for around the same price, but take notice, the premiums that I shorted, that's where most of the gain is coming from. And I noticed that as it was breaking out today, up until it like really hit like 16, 17, only thing I was making money on was shorting the premium. So that being said, I would watch out for it. And we talked about it. It literally might go crazy here, because I've noticed that as people are looking at it and watching it throughout the day, the only counter argument people are saying now is there's going to be a potential offering. So literally, this is like good and bad. Anytime I hear this, then it's kind of saying, well, maybe there is an offering. We've seen that happen before, and that would kill the rally. But other than that, that kind of means there's nothing else stopping it. So we will see what happens. But like I said, I sold out 3 out of 5. Again, even though I like it, I didn't want to make it where I had to pay any money. Now we have a free play. We could get some upside. And if I am going to double dip, I'm going to use those debit spreads, baby. So shout out to the call. But those are the main plays. As far as everything else, I did make a couple of other plays. Like I said, I got rid of the BBBYs. We sold those Disney. So remember, I double dipped and then I got clapped. Well, those plays came back up today and they went up 100%. I sold 8 out of 11 that I had. I have 3 now for free, so that was good. I sold out of my Netflix at $1 this morning. We bought them for 50 cents like a week and a half ago. And then the Bank of Americas, I cut out of all of those. That one was about like a 300%. So made sure we took some profits, added a couple others, and I did add another play today. This one was a scanner play. It was SE for September. The scanner play was on September 26th if you want to go check out that option chain, but I grabbed a $60 put for 70 cents, only grabbed one. They had earnings after hours. I think they did decent, but stock didn't really move too much, so I thought that one was interesting. But there was that play, the targets, Ford. I grabbed 10 of the daily 1750s for 3 cents. Again, market was kind of slow in the morning, and I was like, hey, I keep talking about Ford. I brought it up. I really like it. Let me get a $30 play. It did go crazy, but the premiums did not move, so watch out for that. And then finally, I grabbed 2 Para for September's, the 32.5 calls, 15 cents a pop, $30 total. And this one, there was a news about them in Walmart doing a deal. So I was like, hey, maybe if it holds the pop, it could go. But I play with time for less than 30 bucks. I said that one could be good. So those were the only other plays. Like I said this week, watch out for the momentum. Watch out for the data. Again, HT, Target, Walmart, Lowe's, any consumer stock you could think of, those are going to be big. Watching that, keeping a nice little eye on oil and natural gas. We'll see where it sets us up. But now the final factor I would say, and a lot of people brought this one up today, watch the dollar, watch the bonds. If you notice, for the last month, the dollar hasn't really moved. I know the market's been ignoring it, but if you think about it, it's literally stayed at the same price. And sadly, same thing for bonds. So as much as I'm watching oil and energy, and I think that will be key, especially after the China stuff today, you're definitely going to want to take a look at some of that stuff. But the real move is going to happen once we see bonds or the dollar pretty much hit a level that we haven't seen or a breakout of the current range that it's been in. So watch out for that. And finally, like we said, man, watch out for that option expiration. It might open the door to a lot of things. So I hope you're ready. But That is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure to post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, success isn't 10 feet away. It's not 100 feet away. Some of you are so close to it. You don't need to change everything around. Just 1 degree to the left, 1 degree to the right. A small tweak could make the difference. You got to stay in the game and be prepared for a various level of outcomes, and you will be good to go, Chad. But like I've been telling you, you're trained for this. You've been ready. You've made it this far. And if you've made it through this, man, what's going to stop you, baby? But I love you, Chad. Drink that water. I'll see you in the morning. And pump it up. I don't have to mute. Pump it up. 39. Come on. Get a good vibe, bro. How some of y'all getting mad? Oh, pump. Stop. I love you. You need peace. See, woosah. See why. Just pump it. You know what can make you happy right now? I was going to play it, but then they'll probably, like, copyright this video, too. So, chat, I love you. Have a good day. I'm going to see you in the morning. Let's close out this week and keep that head on a swivel. Nothing is promised. I need you to be nimble. So, no matter what, we still got a lot coming our way, and nobody knows what's going to happen. But good night. Peace out. I'm like, throwing up gang sign. I don't know. Okay, goodbye.